and welcome to this special conversation on ET Now. I'm Anisha Jain. Well, Piramal Pharma has set itself some tall targets because they're looking at doubling the revenue by 2030 and tripling their operating profits. How exactly they plan to do that? That's something we'll try and decode with Nandini Piramal, the chairperson at Piramal Pharma, joining us right now. Nandini, hi. Thanks so much for hosting us here.
Thank you for having me. It's a pleasure.
To begin with, this entire aspiration of doubling your revenue, what part of it is going to come from inorganic part? Because last many years we had seen you've done, 15 successful acquisitions. What portion will come from that? And what about the Biosecure opportunity? Is that a part of this aspiration of yours?
So we are right now currently focusing on organic growth. So the target that we have set actually composes of organic growth. The way we want to do it is we think that there are secular tailwinds, example, the Biosecure Act, but also overall companies and customers are thinking more about outsourcing. I think we benefit because we're focusing on innovative projects. So 50% of our last year's revenue was on innovation-related work. We're focusing on our differentiated offerings, whether it's sterile fill finish, antibody drug conjugates, or high-potent APIs. And as well as integrated projects, we're one of the few companies that can offer our customers a blend of both East and West, with that it doesn't include China. And I think that's a big benefit for us. So currently focus is on organic growth. We believe that operating leverage by filling our existing sites and maybe doing some brownfield capex will benefit us more. However, we will look for inorganic acquisitions, but it will depend on cash flows, debt levels, and the opportunities.
Okay, so open to that, but it's going to be very strategic in nature as and when the opportunity arises. But the Biosecure bit, how realistic is the opportunity there? Because if you look at the timeline, there are some people talking about it taking shape within a couple of years. There are others talking about 7 to 8 years. What's your own realistic expectation?
So if you go back to March, people weren't talking about it. In June, everyone's like, oh, we need a strategy. What do I do? Right? And then obviously it did get passed by the House. It hasn't been passed by the Senate, so it's not yet law.
Correct.
Right? So, but people are beginning to think about what is the plan, what is the strategy, but they do have an 8-year window as of right now. So I think what will happen is for new projects, people will rethink. Mm-hmm. For existing projects, people may say, look, I don't want to spend the money to change location yet. And, when the next kind of meeting point or next end point comes, then I'll think about it. So I think it'll be a transition. I don't see it being a large kind of bolus of work that'll come at one time because they have given an 8-year transition as of now. But I think people will have to rethink what their supply chain strategy overall.
Yeah, but the rethinking starts from now itself, right?
Exactly. But I'm just saying so we have seen improvement in an increase in requests for proposals, exactly. And so has everyone else. But no one's made decisions yet. And I think that will take time.
And what's the size, to your mind, of this opportunity? Let's say even in 7, 8 years, how large it could be for India and for yourself?
I think it may not just be for India, it may be for the US as well. And I think that's where we're poised to benefit. Correct. Because we can offer people on-patent work in the US as well as India. So, some people might say, look, if they don't like China, then, maybe let's just focus and go closer to home.
Correct.
But I think right now speculation is how I would put it, because we obviously don't know what other people will do. So I do think there's an opportunity, but it'll take time.
Okay, take time. But the brownfield expansion that you talked about, and now given the fact this Biosecure Act might have that push back home, do you think it's going to be a lot more in US versus India and other geographies? How are you looking at it?
It's actually going to be both. We just completed a few expansions in the US in a Riverview, Michigan facility, as well as our Grangemouth facility in Scotland for antibody drug conjugates. So it'll be a mix, and it'll be kind of demand and customer led. It may be that we do plan over the next 5-year period to do some expansions in our Digwal facility, but also in our Lexington facility, which is sterile fill finish. As you know, that there's a shortage of sterile fill finish capability, and we have some pretty cool isolator-based technology in Lexington, so that's demand.
But any amount that you've earmarked for capex, and I ask you that because over the last few years, because the capex was high, the ROCs were taking a bit of a hit. What's the aspiration to kind of?
So I think we'll manage capex overall. I think the overall intention is to reduce our debt to EBITDA ratio to 1. So we will we'll balance it between through increasing EBITDA and cash flows.
And cash flows purely internal, or are you looking at some sort of fundraising?
Right now, we believe we can manage all our expansion and our growth through internally accrued cash flows.
Okay, that's good to hear. Let me break it down business-wise and also talk to you about margins. I think you've laid down the roadmap that you're looking at margins to go back to 25% level. If I have it right, pre the entire demerger process, the margins used to be 28, 29% as well. Why are you limiting it to 25% and not laying yourself a bit more aggressive target here?
I think we want to do a high confidence target, and I'd rather say we get there and then we'll talk, the next, because if I'd said a 40% target, you would have been like, how are you going to get there? So I think let's say that we want to get there, and then we'll, once we get there, then we can then we'll reset our aspirations.
So you're being conservative, both in terms of your margin aspirations and top line, because it doesn't include any inorganic opportunity or Biosecure whatsoever.
I agree. Again, the Biosecure Act is not law yet.
Fair.
So, we didn't want to pin our hopes on something that isn't passed yet.
Okay, point taken. Let me talk about the CHG section, because I understand that there was some pricing pressure that you were dealing with there. How's the situation on the ground now?
So we are in a generics market. There will be some pricing pressure always, but I think what we've done is, but in this market specifically, I think there's a little less pricing pressure than others because there's a fewer number of competitors than other generic markets. But we have actually, through our control of vertical supply chain, we've actually managed to control cost and manage to margin. I think this year there's been a little bit of a challenge. We've had some compliance-related FDA studies to do. The FDA says you have to do the study, you do the study. So, the kind of one-time costs that way. And as we've expanded both at the Dahej site for key starting materials and at the Digwal site for incremental capacity for sevoflurane, and those will come online next year. We've had to, incur startup and employee costs for that.
Okay, point taken. As far as the CDMO business is concerned, which is of course your mainstay, tell me where the growth will come from in terms of the product pipeline which is there, in terms of the kind of order book that you have. What really is giving you the fillip to perhaps go to the next level there?
So one of the things we've seen a doubling of commercial on-patent revenue.
Okay. And
from 9 molecules in, I think, FY17 to about more than, 17 or 18 molecules now. And so that's seen a growth, and that's can be reflected in on-patent growth. We also have a number of molecules which are in phase 3, and over the next 3 to 5 years, about half of them should become commercial. And commercial on-patent revenue is revenue that's interesting. It's growing, and it's generally higher margin than late life cycle or generic products.
Okay. And coming back to the India business, the consumer side of it as well, because we have seen quite a bit of growth there, especially because it's coming in from a lower scale, and e-commerce was playing a large part in it. Where do you see it growing from here on?
So we want to again, increase revenue about double. We want to, I think, focus on our power brands of Littles and Lactocalamine, which are both in beauty and baby. And the way we see it, we'll actually put money into media and promotion, as well as adding new products and new variants. So it's going to be a mix of e-commerce growth as well as what we call omni-channel, so grocery stores, chemists, as well as supermarkets and modern trade.
But isn't that space getting a bit too competitive with a lot of local brands coming in as well?
Well, I think the Indian consumer is, I think in consumption is increasing. I think I'm still very confident as people, raise incomes, there is less, there's more focus on, I think, on health and wellness and quality of products, not just cost. So I think that's where we benefit.
And the men's section for that? Because that, again, is something that you're looking at very
positively. We've just launched a grooming range called Bohem, and that's available online. And the way we actually...
How's been the initial response?
It's actually been pretty good. So our plan is we always launch things online as a way of testing the market, seeing what sells, seeing what the price points are that make sense. And once you get to scale, then we have the ability, we actually touch 180,000 chemists. We touch a large number of modern trade as well as super stockists and standalone supermarkets. And getting to those that's where the distribution works.
We've talked about the long-term targets, but let me talk about the immediate target, the let's say next couple of years. Will the growth that we're talking about be a bit more, fag-ended, that it will be higher in the later years, or is it going to be?
No, I think we want to actually continue to grow incrementally, both, I think we've said mid-teens for the year, and that's the kind of target we have overall. And we want to increase EBITDA and EBITDA margins by a couple of percentage points every year. So it's not a hockey stick. I think the only thing that, in a way, might be a hockey stick would be a little bit on the PAT margins, because as we balance our growth across, then we should see exponential increase in PAT.
Okay, so waiting by for that. And just lastly, to wrap up the conversation, a word on the debt as well. So you have the target of bringing it down to 1x. But what's the timeline for that as well?
I think it's going to happen again over the next 5 years. I think the increasing EBITDA will help. Yes, and then as we see over the next 2 years, we expect interest rates to soften. We've seen the Fed already do a rate cut, so at least another couple of years we should hopefully see interest rates soften.
Okay, with that positive outlook, let's wrap up the conversation. Thanks so much, Nandini, for
Thank you so much for having me.
If you like this video, then like, share and subscribe to ET Now.